What's going on, guys? It's Henry, and today I want to do a full analysis on Nvidia, and specifically I want to do a very specific option trading strategy on Nvidia, betting that the stock will not rise significantly, and if it doesn't continue to rise significantly, then I'm going to collect a handsome option profit. The strategy that I'm going to run today is called a call credit spread. It's going to involve me selling one call option and buying another call option for a total risk of $500, and that's going to bring me in a very large return. We're going to see exactly how much I'm going to bring in just a moment, but first I want to give you a little bit of a simple analysis on Nvidia. First of all, two things that I'm going to consider on Nvidia in my two cases are Nvidia is a quality company at the end of the day. It is growing for a reason, and it has a strong position in a few key markets, and I think Nvidia will continue to rise. However, I'm going to bet that it is a little bit overvalued at this point in time. Now, the company also benefits from macro tailwinds. That's part of the reason we see it rising so much right now as well, and it has a huge addressable market, but the stock has gotten too hot too quick. I believe growth will inevitably slow down over the coming years, and shares are trading at a relatively high valuation right now. So let's go into the option chain and let's take a look at some attractive options that I'm about to trade. All right, guys, so we're going to take a look at two different things. I'm going to have my Robinhood account open right now so I can make the trade right in front of you guys live, and I'm also going to have Yahoo Finance open in front of me as well. Now, the first thing that I want to do is I want to look through Yahoo Finance. Specifically, I like looking at the statistics because for me, it's very interesting to see what valuation Nvidia has in terms of price to sales, price to earnings, how fast are they growing, how much debt do they have. I'm going to do a full analysis. And actually, guys, the only thing that Yahoo Finance didn't update is the market cap. The market cap is actually $758 billion right now. So we're 3/4 of the way to $1 trillion. Now, is Nvidia a $1 trillion company? I don't know. I don't think it is just yet. If you guys take a look at the price to sales ratio, it is 29. So 29 price to sales ratio, just to put that in perspective, is basically very similar to Tesla. Tesla was trading at 17 before the big run up. Now that Tesla's up 50%, well, 50% of roughly 18 is 9, so Tesla's trading at roughly 27 price to sales ratio without having it open in front of me. But that means that Nvidia is basically a little bit more expensive than Tesla in terms of growth. So it's going to be pretty safe for me to sell call credit spreads at a very high strike price because, well, this stock is already trading for Tesla-like valuations. I can't imagine this stock trading any more expensive than it is right now. And luckily, the stock is actually rising as I'm making this video. If I go to the one-day chart, we're up 1.84%, and for the week we're up 18%. So I do believe that we're red hot right now, and I do want to take a look at the RSI. The RSI will tell me some information on if the stock is over or oversold. I currently have the correlation coefficient. I need to get rid of that. Go to indicators and click RSI right here. I'm going to do 14-day RSI right now. Saved, and we are right there in the overbought territory. We're currently sitting at an 89 RSI. Now, for some context, an 80 RSI tells us the stock is overbought, simply said, and it is currently in 89. If you guys can actually zoom in here to this little spot right here, you can see that there's a little blue area here saying that this stock is way overbought. Not only is it past 80, it's nearly at 90 currently. And also, another technical indicator that I have in terms of technical analysis and looking at charts is the Bollinger Band. And as you guys can see, this stock looks very similar to Tesla. I mean, I kind of scratch my head and think, is this Tesla stock right in front of me in the very flesh? Because Tesla stock has a very similar Bollinger Band. The Bollinger Band here actually expanded. As you can see, there was a very narrow Bollinger Band. The stock was trading within a certain range. And after the huge explosion past $300 per share, the Bollinger Band has completely opened up. You can see to the upside as well as the downside. So there's a lot of question mark as what will happen with Nvidia stock next. Now, what I'm going to do in Robinhood is show you how I'm going to capitalize on this opportunity right now that the stock is presenting. Essentially, I don't think the stock can go too much higher. I'm going to click trade Nvidia options. I'm going to go out until January 21st, which is basically just 2 months from today. It's 2 months and 2 weeks from today. Now, I'm doing this in a very strategic manner because basically if this trade goes well, great, I'm going to hold it into January. However, in late December, if this trade does not go well, I can just close it in December and do something called tax loss harvesting. Tax loss harvesting will allow me to sell the option for loss and just capture some losses, which will benefit my taxes, since I did make a video on selling a lot of my Tesla stock by accident through a covered call. Now I have so many gains that I don't really mind losses. Now, I'm not out here chasing losses. I don't want to purposely have a loss, but if I have a loss, I'm happy to sell it in late December and capture that loss in terms of tax loss harvesting for my taxes for the year of 2021. Now, if Nvidia is at a profit, that would be great. I'm not going to touch it. I'm going to let it ride into January, and then in January, I will close the position for an official profit profit in January. So either way, it's pretty much a win-win strategy in terms of taxes, but it's also going to be a win-win strategy, in my opinion, on collecting a good amount of premium for a very little amount of risk. All right, so step number one, we have to sell a call option and we have to determine what strike price we're going to sell that call option for. I'm going to click sell call option. And again, I said, I don't think that this stock is going to be a $1 trillion valuation. That means from the current levels, it would have to rise about 33% for us to see a $1 trillion valuation. And I just can't imagine that happening in the next quarter. Maybe that'll happen in a year, maybe that'll happen in 2 years, but I can't imagine Nvidia becoming the next Tesla because it has already had a Tesla-like move higher in terms of 1 week chart showing an 18% gain. Now in terms of the 1 month chart, I'm sure we're also up a huge percentage, 305. We started off at around 204, so we're up 33% for the month. So it has already had a Tesla-like move, so I can't imagine that it'll continue to go up to $1 trillion because it has already went to the moon. I don't think it's going to go to the next moon or to Saturn or to another planet. It has already reached the moon, in my opinion. Now we're going to sell a call option, and the first thing that I want to do is I'm actually going to go buy call option. The reason why I want to do that, guys, if you take a look over here, it says to break even. So Robinhood tells us the percentage to break even on this option. Now I'm going to use this break even point to basically go up to around 30% return. The reason I'm doing that is because, again, this stock at 30% would have a $1 trillion valuation, and I don't think we're there yet. So I'm going to scroll up and try to find around 30%. Here it is. Around 30% is going to be $387.50 per share. I'm going to be very comfortable to sell at the $387 level in terms of opening up this call credit spread. Now, the only thing is with this call credit spread, I could go for 380, 385 to open up a $500 spread. In fact, that's pretty much what I should do. However, what I already noticed right off the bat is because this option is so far out of the money and this is such a low likelihood of happening, that the difference here in terms of the premiums is about $70. So $70 in terms of a $500 worth of risk. So $70 divided by $500 is going to be about a 14% return. But in fact, it's going to be closer to 16% because it's really $70 divided by the collateral that you put in, which is 500, minus the premium that you collect. Basically, it's $70 for $430 worth of risk. So anyone with $430 in their portfolio can make $70 on this option trade right now. Now, 16% return is going to be a very attractive return because 16 divided by 2, which is basically 2 months from expiration, is going to be about an 8% return per month. And I don't know about you guys, but the last time I checked, the stock market returns an average of 8 to 12% per year. So if we can make 8% per month, we're going to be in a very good position to get stupid rich. And by the way, if you do want to get stupid rich, I have a free email newsletter that you can sign up for below, or you can always join the private Discord community to follow my live trades. Now, what I'm going to do is I'm thinking about selling the 380 strike. I'm going to click right here for 380, but I will tell you guys, I'm going to probably do 2 different trades. So I'm looking at 380 and 385, but I'm also having my eye on 387.5 and 400. I'm going to explain that second trade in just a moment. I also see this as a profitable trading opportunity, but first of all, I'm going to sell the 380 strike. Now I'm going to buy the 385 strike. That's going to open up my call credit spread. Now, opening up a call credit spread just means that I have the risk between the strike prices. So 385 and 380, my max risk is $500. However, the premium that I collect is going to reduce the collateral I have to put up. I'm going to buy the 385, and as you guys can see here, it's going to be a $63 credit. Now, $500 minus 63 is $437. So it's a very good return. Again, it's about 8%. It's going to come out to about 7.5%, and I'm very excited about this trade. So I'm going to click continue. I'm going to place this trade, and after I finish this trade, I'm actually going to place another trade for a call credit spread that I think is even a little bit more exciting because it has a better risk return profile. Boom, we got filled. So $65 and a $435 worth of risk. So I think this is a fantastic trade that I'm going to see what happens in terms of the next couple of months. And in late December, again, if this is a loss, I'm just going to close out the position. And if it's for a gain, I'm going to continue holding it into 2022. Now, the next trade that I want to make is going to be very similar to the one that I just opened up, which gave me about 7.5% return return for a monthly basis, or a total percentage return of about 15%. Now, what I do want to do is a similar trade, but now I'm going to go up to $387.50. This is actually going to protect me even more. And oh my goodness, Nvidia is currently $308 per share, so it's continuing to go to the moon. However, I'm going to stick to my guns. I'm going to open up one more contract here. So I'm going to sell the 387.5 and I'm going to buy the 400. This is actually going to be trading for a higher premium than it was previously when Nvidia was $303 per share, because as Nvidia goes up, option traders realize that the call options are more valuable since they're closer to the money. Therefore, selling call credit spreads is going to be more profitable, or at least more premium the higher Nvidia goes. So now, as you guys can see, I'm selling the 387.5 and I'm buying the $400 call strike. Now, I would love to sell the 390 and buy the 395, but unfortunately that's not currently available. So this is the best that I can do. Now I'm going to be collecting about $155. I'm going to click continue here because I'd rather Robinhood do the math for me. So this is really interesting. I'm going to collect about $155 for a max loss of $1,100. So essentially, again, I'm going to be collecting about a 14% return here. Cool. Again, so I'm interested in this trade because the only way I can lose on this trade is if Nvidia were to go higher than $387.50 up to $400. In that range, I start to lose money. At $400, I lose the entire collateral that I put up, which is $1,100. And in this scenario, the only way that this happens is if Nvidia will hit a $1 trillion valuation in the next 2.5 months. Now, because I don't think that's likely, this is going to be a trade that I'm comfortable making. Boom. So I just got filled again, $150 for $1,100 worth of risk. These are the option strategies that I use to grow a small portfolio, and I'm very excited about this trade. I will keep you guys updated. And again, if you do want to follow my live trades, then you can always join the private Discord. Thank you so much for watching, and I'll see you guys in the next one.